Here's a financial fact almost no one wants to admit. The market doesn't react to what you feel. It reacts to what actually delivers results. While many investors panic after just 2 down days, what truly holds beginners back is always the same mistake: lack of method. Without a clear process, every fluctuation feels like a threat, every rally feels like confirmation, and decisions become impulsive instead of strategic. That destroys returns, increases risk, and makes people rotate portfolios thinking they're being proactive, when in reality they're just being emotional. And this is exactly where most investors start losing money, without even realizing the problem isn't the market, it's their own behavior. We just saw proof of that. Wall Street managed to snap a 2-day losing streak, not because fear disappeared, but because capital flowed back to where fundamentals still exist. Semiconductor stocks led the rebound, supported by strong results in real demand, especially tied to artificial intelligence. In the market, you don't lose money because stocks went down. You lose money because you bought without value and sold without patience. And the next point makes this even clearer. Most people don't fail due to lack of opportunity, but because they invest with urgency in a game that only rewards patience. Investors behave this way because they chase fast results in an environment that punishes rushed decisions. The brain tries to avoid risk and ends up choosing the wrong risk at the worst possible moment. When futures stabilize after a rebound, many interpret it as uncertainty. In reality, the market is doing what it always does, pricing value before emotion. Companies like TSMC and NVIDIA don't lead the market because they react to noise. They win because they execute clear, consistent strategies based on real demand. Smart capital follows that. The average investor tries to predict the next move and always ends up late. And here is the part almost no one wants to admit. Most people read the market to confirm their emotions, not to interpret price. If that made you uncomfortable, perfect. That's the signal that the issue isn't the asset you choose. It's how you behave when the chart moves. Here's the simple adjustment that changes everything. Treat every investment as a probability, not a promise. Don't buy narratives, buy fundamentals. Don't increase risk out of anxiety, increase conviction through method. The market doesn't demand genius, it demands discipline, and once you understand that, you stop reacting and start accumulating.